Hey guys, welcome to this week's global stock market recap. I'm Robert Montez with Link Financial Advisory. Today we're going to be going over our recap, what helped the market, what hurt the market, and your key takeaways. So let's get into our recap. Markets here domestically did finish down last week. The S&P was down about 1.5%, and then the Nasdaq and the Dow were both down about 2.6%. Now it's not all doom and gloom. There were some positives, so let's start with that. What helped the market last week was primarily President Trump's administration pausing tariffs for 90 days. So, on about $450 billion of goods coming in, we did see a pause in those tariffs. We also saw some things excluded, such as semiconductors, computers, phones, things of that nature. So, that really helped the industry as a whole have a kind of collective sigh of relief. We also saw some positive economic indicators from inflation. So, wholesale prices and the consumer price index, wholesale prices 2% annualized, CPI about 2.6%. This is really good. It's kind of like that Goldilocks zone where inflation is basically not too high, not too low. So this allowed the Fed to kind of back off some of their concerns about having to raise rates in the future to keep inflation down. Last of all, we saw companies post some positive earnings reports this past quarter. So we saw companies like Apple have really strong profits. I think their quarterly profits were like at 28%. Nvidia is still doing amazing with all the demand for AI chips. That's definitely helping them. And we saw financial companies like JP Morgan, with interest rates going up, their stock price actually went up about 12% last week. So there were some positives that helped boost the indexes as a whole. What's taking away and what's hurting the market? The big one is the trade war between the United States and China. No surprise there. So, obviously, President Trump's administration put a 145% tariff on incoming goods from China. That equates to about $300 billion of goods coming into our nation. So, some big numbers there. China retaliated with a 125% tariff on our goods going there. So, that's going to add up to about $80 billion of goods we send their way. Of course, this creates uncertainty, and the market doesn't like uncertainty, which is what we're seeing really kind of drive those numbers down. We did also see 10-year Treasury bond rates go up to 4.5%. This by itself is not a huge deal, but it's just an indicator saying that we have to pay attention to inflation. Now, the VIX index, which is an index that kind of measures volatility and how people feel, was down to 18. So looking forward, things do look good. But with the Treasury yield coming up, it does signal that it's going to cost more money for businesses to borrow money, which detracts from profits and maybe slows down their growth. Key takeaways for you guys. I say it every week: stay diversified. If you have a globally diversified portfolio, you're making sure you're doing your research, you have a professional team possibly doing that for you. Trust your strategy. Don't make any knee jerk reactions. Don't panic. And before you do anything crazy, I would say just consult with someone you really trust. Make sure you're doing your research there. As always, if you'd like a second opinion, we are here to help. Feel free to reach out, use this as a value added resource. If you're a 401k plan administrator, we'd love to talk to you as well. We really focus on helping our clients and 401k clients specifically improve their financial wellness for the participants. Thank you guys so much. Until next week, we'll catch you then.